All right, what's up, guys? So, as I said in my last video, I was expecting the market to go down, to have a nice pullback on the short to medium term, and that if we were going to have a pullback after this monstrous rally to the upside that I told you guys to be careful of, that it would happen in the next coming weeks, that we should basically enter a window of weakness. And that's basically what's going on right now. Just wanted to make a quick update. Told you guys that minimum we were going to have a mean reversion right here, which is at about 550. So in my humble opinion, I still think there's a high probability that we minimum go to this lower level. Told you guys there was some gaps also to fill. So now the question is, are we going to basically create a W pattern and then enter a brand new bull market? Or are we going to go lower and retest these lower level right here, which if you guys remember, 512 was my first target for this bear market. We hit that right here. We actually went below it for a short period of time and then we bounced right back above. We also have my second target for this bear market, which was at about 450, 455. At this point, I'm not sure if we're going to get it though. I do think that the probabilities have changed. And the big reason why is the Trump administration pivot. They pivoted, obviously, a couple of weeks ago. This is why we've had this beautiful rally to the upside when you saw the Trump administration soften their stance on the trade wars and the trade deals. And basically, they went on a political campaign to stack some wins because basically, we learned that Trump has a put when it comes to the stock market, but he also has a second put, which is how favorable he is in the polls. Hopefully that makes sense. It seems that it is something that he does pay attention. And obviously, when we had this big market correction right here and it happened super quick, his polls tanked. And obviously, he basically went on a political campaign win to bring that up. But again, in my last video, I told you guys that I personally thought it was a mistake that they folded too early and that it would end up biting them in the ass, basically, and that interest rate would go back up. And that's basically what happened. So that's one of the reasons why we started this sell-off. In my humble opinion, the market was just searching for a reason to have this pullback because we were way too overextended. You know, I was not expecting us to go almost back to 6,000. I thought we would stop at, 570, 580 max, but we went way higher. So right now I'm still expecting us to go lower short term. So hopefully that makes sense. Fear and greed also is a little bit lower than a week ago. It was at 70. And now we went back to say 64, but we're still in greed. I do believe that we will go lower if I am correct and we do get that second leg to the downside. And another reason why I was expecting us to have a pullback was obviously the money, retail. Basically, they capitulated at the bottom and then they FOMO started buying back, when we were at good ranges, but then they obviously FOMO'd right back all in the market, basically at the top. And I was expecting us to basically go down. That was one of the reasons. And of course, the put to call ratio and a bunch of other internals that were basically indicating that we were going to go back down. And I'm still seeing a bearish market structure for now, even though it was a beautiful rally. I think it will be faded. Now the question, as I mentioned, are we going to break the lows? And I personally don't think that is probable anymore. Worst case scenario, probably, honestly, will most likely create a double bottom and then go higher from there into Q4 of 2025. So that's kind of what I'm seeing. Obviously, I could be completely wrong, but seeing the pivot from the Trump administration has been, very important to notice. And then all the stuff I said in my last video also were all important to understand and to listen to the Trump administration. And they've been very clear as well. And I wanted to talk about my second point that's going to be very important for us to make good returns for long-term portfolio and short-term tactical portfolios. And it's listening to the Trump administration. And what I mean by that is for the past couple of weeks, they have been very clear where we should put our money to work. And also there has been some new talks also coming from the Treasury Secretary, Scott Bessent. And basically the Trump administration, they didn't just pivot. They also came to a realization that a lot of people already knew, but they basically realized that it's not going to be possible to reduce the deficit with trades and with Doge. and that the only way that the US is going to be able to continue their large deficit is with GDP growth. And that's going to be very important. You're going to understand why I'm going with this in the next coming seconds. They're very vocal about this, and this is what I like about the Trump administration right now is they're very clear and they speak well to the market. And Scott Bessent and Elon Musk as well on Twitter has been basically saying the same script. And they're basically saying that the only way the US can basically, get away with this continued fiscal deficit is by having high GDP productivity growth. And the only way you can do that is with AI and robotics, and especially humanoids, Optimus. So that's where I'm going with this. You basically want to have a high allocation to Tesla and to other AI companies that are going to, have a big impact on GDP growth. This is why I'm so bullish on Tesla. I haven't changed my thoughts on Tesla. I can put it on the chart as well. Told you guys that, long term, it was still going to be an amazing buying opportunity, and to just stay long. And basically, Elon going rogue was the reason why the stock basically plummeted. And right now, obviously, he has basically exited Doge, and that's why the stock is rebounding very nicely. So this is why you just want to be patient with Tesla. I do expect Tesla to go back down as well. I'm not sure if we're going to go back to the means. That's pretty low. That's 260, 250. If that happens, it's going to be an amazing buying opportunity. So don't be scared about that. Personally, if you do not have a Tesla allocation in your long-term portfolio for the next 4 years, I think it's going to be a mistake. And I wouldn't be surprised if, we create this W pattern. And then honestly, I think people are going to be shocked how fast and how high Tesla will be in 1 year from now. So I do believe that for me personally, Tesla is a 10% allocation to a portfolio. So now I digress for Tesla. Just wanted to talk about it real quick. I'm just going to go back to listening to the Trump administration. It's going to be very important for the next 4 years to just listen and to put your money to work where they basically want you to put your money to work. And it's going to be in high growth tech stock, guys, that boost GDP of the country. You don't really have a choice, especially AI and robotics, as I mentioned. And then the other thing that's going to be very important, if you actually just listen, obviously, is Bitcoin. All right, you want to have some Bitcoin, and this is the next topic I want to talk about. Obviously, 3 weeks ago, I told you guys that, I got a long signal right here in this ballpark at 93,000 on Bitcoin from my trend following model. It's very powerful. Told you guys I was, taking tactical bullish trades on Bitcoin, selling premium. And so, yeah, basically it worked very well. I did a mistake though with the micro strategy, and that did cost me some money. But anyways, I digress. The trade was, I could have not seen that. And we're in this type of market right now where when you're wrong, just get out. That's what I did. And I'm still positive, right? So that's going to happen. We're in a market where you just don't want to take too much risk and you want to survive 2025. I've told you guys that before. Just survive this year, and afterwards, I do believe we're going to have 3 beautiful years in the stock market. And going back to basically Bitcoin, the point I'm going to make is very important to understand, and it has to do with where we're heading for the next 10 years. And I do believe we're entering the fourth turning. I mean, at this point, you can't really pretend like it's not happening. And if you don't know what the fourth turning is, it's very important to be aware for your long-term portfolio, in my humble opinion. So just use AI and ask AI what it means, and it's going to basically tell you what it means. And it's very important because there's specific investments that you absolutely do not want to have in your long-term portfolios, and others that will help you survive a new paradigm shift to then capitalize on, a new, basically a new simulation, or whatever you want to call it, right? It happens every couple of decades where things change in a big way, and there's specific assets that just get completely crushed and can destroy your long-term wealth and your retirement accounts. Not financial advice, but very important just to be aware of it. And right now we have gold going up. We have Bitcoin that's been basically on a rampage, breaking all-time highs. By the way, my trend following is still bullish, so we're still bullish on my trend following model for now. Even though we had a small pullback, we're still bullish for now. And when the model tell me to get out, I'm gonna stop. That's it. But That's for short-term tactical trading. And right now, what I'm realizing with the strength, the relative strength in Bitcoin and in gold, yields going up, currencies going down, that's screaming the for turning. And I believe that Bitcoin is also an asset that you must own at this point. If you still don't understand, I mean, I'm listening to the market, and the market is basically screaming for turning, and that Bitcoin is going to have a role to play in this new era we're going to enter, and in this very volatile period we're going to be in, most likely for the next decade. And that, yeah, Bitcoin is going to be it's going to be a thing that most likely, if you do not have in your portfolio, you'll probably regret. You want 10% minimum of your portfolio in Bitcoin. I already showed you guys, it's not my personal opinion, it's based on statistics. I showed you guys that I again forgot to pull those, but yeah, I'll show them again in another video. But if you have 10% of your portfolio in Bitcoin and 9% you win cash for the past 5 years, you would have outperformed the S&P 500, which is pretty crazy. So now imagine if you had just 10% of your net worth in Bitcoin, you just leave it there, exchange traded fund, please. Especially if you're like older, do not start buying crypto yourself in wallets and stuff like that. You can get hacked and lose your Bitcoin. Exchange traded funds are there now. It's super liquid. It's like buying the S&P 500, but just a Bitcoin. So that's what I would suggest, not financial advice. That's what I'm doing as well for my parents, right? So hopefully that helps. Hopefully that makes sense. And yeah, if you had just 10% in Bitcoin and 90% in the S&P 500, now imagine how much returns you would have made, right? So just saying. And of course, it's going to be volatile. But the good news is I'm not expecting these crazy bear markets that Bitcoin used to do, guys. I'm just not, like these types of movements right here. I don't think we're going to see this again. Of course, are we going to have, deep corrections like we've had here? Of course, like Bitcoin is volatile, but I don't think that we're going to have these crazy 80, 70% down anymore. Not with the ATFs and traditional finance embracing Bitcoin with multiple traditional financial products. So that's kind of out of the window, in my humble opinion. It doesn't mean that we can't go at one point back to 50 to 60K, which is the floor, in my humble opinion, for Bitcoin long term. For now, when we do get a serious pullback, which most likely we will get, looking at the probabilities here, minimum, right? Obviously, on the short term, the means is at 98,000, excuse me. So we could for sure go back to the means as well, just like the S&P 500 basically. But personally, I would just have a 10% allocation to Bitcoin for the next 4 years minimum. And I believe that, you're going to be very happy. I'm going to be very happy. That's my game plan. So hopefully that makes sense. I digress. I could continue on this for another hour, already 15 minutes in recording this video. So that's pretty much it. So yeah, going back to the S&P 500, basically just I'm expecting us to continue going lower into June, but I'm also expecting July to be a positive month. All right, so don't expect the entire summer to be bearish, but I am expecting June to be bearish, if that makes sense, as a month. And looking at the post-election year seasonal patterns, right, we're basically entering right here, kind of like this pattern right here, this fractal pattern. And yeah, and afterwards, I do believe that July most likely will probably be a good month to the upside. And then we'll, obviously we always have September into October, but afterwards, in my humble opinion, I do believe that mid-September, you want to start being long equities in your portfolios for Q4 of the 2025. And most likely we'll kind of have, digested all the volatility of this year, and then most likely could set us up for a good 2026. We'll see. But that's for now on the short term, and obviously we'll have to obviously just track the market and see. I'm hoping that we, as I said in my last video, we kind of go nowhere for this year, for the rest of 2025 into Q4. And then I do believe that it could set us up for 3 really good years. There's going to be bumps down the road, but those could be really crazy years to the upside. So hopefully that makes sense. Of course, there's always a possibility we break the lows here. I don't think it's likely. I think it's less than 10% probabilities. We could, of course, go back to the second standard deviation right here. I will be buying here, by the way, at 512. That's my first target. I will be adding. I believe that, again, if that happens, you'll see the Trump administration pivot again, and send some bullish signals to the market. And also, you're most likely going to have the Fed also willing to start pushing liquidity in the market. So I'm not too concerned about that. Of course, I could be wrong and we could, hit my second target of the bear market that I had, but I no longer think it's a high probability setup, if that makes sense. And the best way to know, honestly, is you'll start seeing the market structure go sideways. So if I start seeing my market structure go sideways, that's very bullish. That's basically saying that there's a lot of accumulation and just looking at internals, and that's pretty much it. So just expect downside or best case scenario. We just chop around like this, and we'll go sideways for a little while until eventually we go up, or we go to the means, we go to these lower levels, and then I'll update you guys, when I'm buying, basically. But I'm prepared to allocate capital, and it's not going to be a time to panic, if that makes sense. So hopefully you don't panic again. Just like, I told you guys I was buying here. I'm going to be ready again to buy more again in long-term portfolios. So hopefully that makes sense. Also, just want to look at the VIX real quick. So the VIX also almost went to the means yesterday, if I'm not mistaken. But basically, looking at the VIX, you can see that basically, if we're gonna have like that another big pullback, like a second leg to the downside, MACD cross right here, it should happen. So this is why I was telling you guys that I get ready for a good leg down, the second leg down. I'm not sure though how far it's gonna go, so we'll have to monitor the market and just look at oversold conditions in the internals. And as you guys can see right here, that was kind of the bottom for the VIX with my M score model right here. It turned green right here, so that was right here. And since then, basically the VIX has slowly been creeping up, and I'm expecting it to, we could go to the first standard deviation or even second standard deviation here for the VIX. If basically the market has a big leg to the downside, and then obviously it's going to be a great buying opportunity into July. And yeah, that's pretty much it. So hopefully that makes sense. We'll see. Been pretty spot on, not perfect, but pretty good calls on this channel. So that's kind of my game plan. So hopefully that makes sense and that helps you out. And yeah, catch you in the next video. Stay blessed and God bless you.